What's going on, guys? Welcome back to another video. In this video, we're going to be going over Senseonics, ticker symbol SENS. You guys requested this video a lot in the comment sections of one of my previous videos, so I'm going to give you guys all my thoughts on if it is a smart decision to be putting any money into SENS, and if I am going to be considering this company for my portfolio as well. So if you guys enjoy the information that I have for you in this video, please go down and hit the like button and hit the subscribe button. It really helps me get this information out to as many people as possible, and you get to stay up to date on all of your favorite stocks and learn about a couple of new ones like SENS. So if we take a look at the chart of SENS, we can see that back in early December, it was trading at around 41 cents and then absolutely went crazy all the way up to the almost $3 mark pretty recently before they announced their pretty substantial share offering. So if you didn't know, basically what SENS does is they are a long-term diabetes sensor implant company. So what they have done is they have a glucose monitoring device that they're trying to get approved for FDA approval, but due to all of the world climate conditions right now, the company has received word from the FDA to expect delays of at least 2 months for its application while the agency tasks its staff with emergency reviews of pandemic tests and other medical devices that may be more suited to handling the pandemic. So that's not great news for the company, but it is still a good sign that the FDA has SENS and this glucose monitoring system on their radar, and it could be receiving FDA approval in the future. So I've recently seen some other YouTube videos pop up about this company, and one of the specific YouTube videos that I thought provided a lot of great in-depth information was the videos by John Paul Investing. So if you guys want some more in-depth information, make sure you go check out his video. He goes in-depth to a lot of the financials of SENS and what the market is for these types of products. But what I haven't seen in a lot of these YouTube videos is that we have a lot of institutional holdings of SENS. If we can see over here, we can see PH Holdings Corporation. A lot of you guys probably have not heard of this company, but they own about 68.3 million shares, a market value of 26 million. So that's pretty high. And if we come down a little bit further, we can see that Vanguard does have a position of about $7 million in this company. When this 13F filing came out, we saw that they decreased their share position by about 313,000 shares, which is not a great sign. But we can also see that BlackRock also owns this company. Now, since it's been getting some traction and it's been kind of gaining a lot of steam on social media, I think we could see some of these larger institutions kind of give it a second look, especially with the massive share run-up that we've seen in SENS recently. But in general, it is always good to see the big names like Vanguard and BlackRock having positions in companies like SENS, no matter how small the position is. It means that they've done their due diligence, they've researched the company, and they've decided that it is a good decision, an investment decision for their portfolios to put money and capital behind this company. Now, I'm always very skeptical of these biotech penny stocks. It's very rare that one of these companies becomes the next big thing in biotech in their field. So I'm always very careful. What I always say, this is just my personal trading strategy. If you are going to be buying any shares of companies like SENS, maybe even BNGO, even though they've proven themselves a little bit more in the market, I would not put in a dollar amount into this company that you are not willing to lose 50 to 60% of that amount. You have to be okay with these companies fluctuating so much. They could come out in the next couple of months and the FDA says, hey, sorry, we're not going to give you FDA approval, even though they've kind of been going down that track so far. It's all about the FDA approvals with companies like this, and it's a really big deal if they don't get their systems approved. So the reason for this pretty steep fall off of the highs of SENS was their most recent share offering, and they actually upped it to about $100 million of a share offering. So they're basically going to be doing a 52 million shares of common stock at a price of $1.92, basically $1.93 a share. Basically, they're going to be using this capital for general corporate purposes, including product development, which is good. Always a good sign to see that they're working on developing their product. focused on working to complete clinical development, also very important. They need to complete all of those testing stages before they can get a full FDA approval and get their products out into the market. Secure regulatory approval, FDA, and support anticipated commercial launch of the 365-day products, supporting the collaboration with diabetes care and funding working capital and capital expenditures. So they are going to be using these funds for a good reason. And usually when we see a massive share offering like this in such a low-priced company, we do see a pretty sharp bounce off of the lows after the share offering is finalized. So we can see after hours that the stock is up about 13%. So the stock fell 11 cents during the trading day, but actually went up 31 cents in the after hours trading. So it was actually a positive day overall for SENS. Now, the global market for these types of devices basically is going to be reaching, they're predicting by 2028, it is going to be reaching $19.6 billion. Now, if SENS can get a very high share of this market with their new revolutionary glucose monitoring product, I could see this share valuation going up to at least $10 in the next couple of years. But in the short term, I think we're going to have to see some very good news on this company for it to keep pushing higher. Now, what's interesting about SENS is that it actually does have an options chain, even though it is such a low priced stock. So if we come over and take a look at the options chain, we can see that for the February 19th expiration date, there is a pretty substantial amount of open interest on the call side. And if we take a look at the put side, there's also a decent amount of open interest. The volume on the puts are pretty decent, 5,000 pretty much for the at the money contracts. And then we can see there's a lot more bullish sentiment in the options chain for the February 19th expiration date on the call side. So the implied volatility is absolutely ridiculous on these strikes, but what I'm going to say now is going to be pretty interesting. If you own a lot of shares of SENS, you have to own at least 100 shares in order to do this strategy. You can sell covered calls on your position and collect weekly, monthly, it's going to be monthly income in this case on your shares. So if you own, let's just say $100 or 100 shares worth of SENS, you can actually sell this $4 strike, which is super far out of the money in terms of share price. So it's about 40% out of the money. You can collect for each 100 shares that you own $25. That's pretty good. If you own 1,000 shares of SENS, you could collect $250 just from owning your shares every single month. That's a pretty good deal. And since the implied volatility is so high, if the stock does fall like it did on this day, you can always buy back the contract that you sold for a lower price, and you could actually keep doing this strategy and keep putting the premiums that you collect for selling covered calls on your position back into the stock, which is always a good strategy. Now, since the implied volatility is so high on this options chain, the prices of the options are going to be reflected as higher because it's predicted that the stock is going to be having such a high move in either direction in the near future. So if you only have 100 shares of SENS and you collect $25 in premium, you could actually buy almost 11 or 12 new shares with the premium that you collected and add to your position. Now, if you do this enough times, you can actually get your cost basis on your position down to $0, which would always be a great idea. You can take your initial investment back. The only problem with that strategy is you are going to be subject to short-term capital gains tax since you are selling these options and collecting the profit in the short term, and they're not going to be yearly contracts. So we can also go out a little bit further. The $4 strike on the March 19th date is going to be around $45 that you would collect if you were to use this strategy. Now, I'm not saying personally that I'm going to be investing in SENS anytime soon. I always like to stay away from the penny stocks. Options are really my specialty. That's what I always trade. And I never trade with an amount that I am not willing to lose and have it completely go to zero. But if you do own a lot of shares of SENS and you want to kind of make some weekly, monthly income off of your position, selling these covered calls is actually a really great idea because the premiums are going to be so high, even for the super far out of the money contracts. So that's going to be it for this video. If you guys enjoyed what I had for you in this one, please go down and hit the like button and hit the subscribe button. It really helps me get this information out to as many people as possible, and you get to stay up to date on all of your favorite stocks and learn about a couple of new ones. So I hope you guys are having a great weekend. Thank you guys so much for pushing me over 5,000 subscribers, and I'll see you guys in the next video.